Hey everyone, it's Mark Ferguson with Invest for More, and welcome to another real estate investing video. Today we're talking about housing prices and where I think they're going to go in 2022. Now, I don't like to make predictions on what prices will do, but I do kind of guesstimate on what direction I think things are headed. So, are things going to crash? Will they be normal? Will they keep going up? I'll give you a little bit of data and what my thoughts are on what might happen. So, I'm going to look at inventory, which is very important as far as prices, cost to build, and a couple other factors. I don't think everything's just going to crash and implode like a lot of other channels are saying right now. I think there's a lot of factors to consider about that, and I'll show you why. So we'll get into that, but first, of course, check out investformore.com for much more information on our flips, rentals, being an agent, all that great stuff. We have tons of deals going on right now. We have 5 properties under contract to buy in the next 3 weeks, so it's going to be crazy. So if you like watching our video tours of our houses, our remodel progress, all that, make sure you subscribe and make sure you stick around for a lot of new content coming up. All right, so let's check out a really cool chart first on what housing inventory is doing right now. All right, so Fred, the St. Louis Fred Bank, has some amazing data on real estate, and this is what we're looking at right now. This chart shows active listing count in the United States. So that's how many houses are actively for sale in the United States right now. And I wish it went back farther, and hopefully I can find some more charts that will go back farther than this to show you what it was like before 2016. But right here you can see in 2016 there was 1.5 active listings in the United States. It goes down, goes up, goes down. You can see it's very seasonal. Usually in the winter listings go down, in the spring and summer they go up. That happens every year. But then something kind of crazy happens. Boom, things dropped a lot. This is even before COVID, right? We had a big decrease. Then COVID hit, and they didn't increase like normal, and they just kept dropping and dropping and dropping to crazy low levels. And what you saw earlier this year was a lot of people predicted, oh, the market's turning around, things are going to go downhill, prices are going to start dropping because inventory's going up. Well, that's what happens every time that time of year, right? As we can see back here, it always kind of goes up in the spring and summer, and then it drops back down again, which is exactly what it did, except we're at less than half of what inventory was 5 years ago, 4 years ago. And why that's important is because 4 or 5 years ago, we weren't experiencing a crash or too much inventory. We were experiencing housing prices going up in most parts of the country 4 or 5 years ago. So a lot of people now are trying to say that all this housing increase and the massive increase in prices happened just since COVID hit. And there has been a larger increase since COVID hit, but prices were still going up before that too, right? It's not a new thing. Housing prices have been going up basically since 2012, the end of the housing crisis, and it's because of lower inventory and tight inventory, and now it's even tighter, and it's not increasing. So for us to see a massive drop in prices or even a decrease in prices, we would need to see way more inventory than we have, because there would just simply are not enough houses for sale for all the people who want to buy. And basic supply and demand says if there are not enough houses for people out there who want to buy, prices are probably going to go up. And how much they go up usually depends on how much it costs to build something. And we had a video about that a couple of weeks ago where we talked about the cost to build and how that judges where housing prices are. And it's just like cars, other industries, right? If you have a huge profit margins in an industry, usually competition comes in, they drive the profit margins down, they drive the prices down. Same thing for housing. If there were huge, massive profit margins for building new houses, there'd be tons of builders coming in, driving those prices down, building houses like crazy because companies like to make money, and especially house builders like to make money. So if there's profit there, you can bet they're going to build, but they're not. And they're not building very much because it's hard to build, it's really expensive to build, and there's not that much profit in it right now because it's so expensive to build. And so the new build cost coupled with extremely low inventory pretty much tells me prices are not dropping anytime soon. In fact, they could continue to go up. Now, here's another really interesting chart I wanted to throw in here real quick, and that's vacant housing units in the United States. So a lot of people say there's all these vacant houses in the US, all these houses just sitting there empty, bank foreclosures just empty, landlords just holding properties empty, which makes no sense. But anyway, this kind of shows us what vacant housing units look like. And they were lower back around 2000 than now, but there's way less people back then as well. And they went up to a peak around 2010. Again, this is mostly, a lot of it's caused by overbuilding, building too many houses, and it's slowly been dropping. Even though the population's been increasing, even though total housing units have been increasing, the total vacant units in the US is decreasing. So we're finding those vacant housing units. Some might be torn down in Detroit, others are being fixed up, sold as occupied housing. There isn't this huge, massive amount of vacant houses just sitting out there to be bought. It's actually a smaller number than there has been in the last 15 years or so. As a percentage of the total housing amount, I heard somewhere that it's the lowest amount of vacant houses we've had since the 1970s. So there's not all these vacant houses just sitting out there. We desperately need more houses to meet. And here's another really cool chart, which is days on market in the United States. So this is how long it takes a house to sell once it's been listed. So you can see in 2017, 16, it was from 70 to 96 days, which is actually a pretty normal amount, maybe even a little bit low. Again, prices were increasing back then, and this is slowly decreased, and boom, really decreased in 2021. So it's gotten worse since COVID as far as the days on market, and slowly increased here, but it does that every other year too. So it's not some big anomaly that days on market is increasing slightly. It's still less than half of what it should be normally, which is, again, another sign that prices will not drop anytime soon and probably keep going up. Okay, so I found another chart from a wealthofcommonsense.com, and this gives us a little more in-depth look at how far back housing inventory goes. And so you can see back here in 2000, it was, this is existing month supply, about 5 months. And so again, we're using kind of different numbers and stuff, which I don't like doing, but it's hard to find all this data together in the same number set. But for housing month supply, you can see it dropped down before the crash, and then boom, the crash hits, and things skyrocketed up to almost a year of housing supply. And then around 2012, 2013, things really get to, get back to normal. You can see that's pretty normal, and things tighten up, and they get tighter and tighter. And while this is happening, prices keep going up and up and up. And then we had a weird little jump right there that not all charts show, but some show. And then it drops down to 3, which is super duper low. So you can see, looking back on a historic average, even before the housing crash, when the market was red hot, we're way, way, way below that. So inventory, the days on market, housing supply would have to increase significantly for us to get anywhere close to worrying about housing prices decreasing a lot. Now that could happen, but how does that usually happen? By building too much, by overbuilding, because right now there simply aren't enough houses, there aren't really that many foreclosures, so where is this inventory going to come from? Everybody would have to decide to sell, more than they are now, which I don't see happening, or we have to build a lot more. So will there be a lot more building? Let's look at that too. So here's our new build chart. You've seen this a lot before if you've seen my channel. Had really high building in the 70s, but ironically, there was no crash here. Just, dropped a little bit, evened out. There's really not been a crash since the 1930s for real estate. Even in the 1980s with 18% interest rates, there's no crash. They stopped building. See that? How they stopped building there. But things popped up again. Then things went in a lull. Building shot back up here. Massive crash. That's a housing crash. Then building slowly gone up. COVID hits, it drops back up again. So we're still kind of about normal, right? But the thing is, the population has kept increasing over and over and over again over all these years. So really, we should have a lot more building to make up for all these years where we weren't building anything. And people say, oh, but if interest rates drop, that's going to kill housing because people won't be able to afford as much house. Well, what happened when interest rates shot up here? They stopped building. What happened when interest rates shot up here? They stop building. If interest rates shoot up, there's a good chance they stop building as much, which means even less inventory, which means interest rates may not affect pricing at all because there'll be less inventory. In fact, there's a couple studies, I have another video that goes over interest rates as well, that showed zero correlation between high interest rates and lower real estate prices. They showed that low interest rates can raise housing prices, but not the other way around, that high interest rates do not decrease prices. possibly because building stops, there's less inventory, and there simply aren't houses for people to buy. Now we have a really telling chart here. And when inventory is tight, when it's low, basically prices are almost always determined by what's the cost to build. People like new houses. If you need more inventory, you build new houses. That's how you meet demand. Well, the price is determined by how much it costs to build, plus the profit needed for those builders. So what has the cost to build done recently? You can see here, it kind of decreased a little bit after the housing crisis because wages went down, we were in a recession, everything went down. And since then, things have just been skyrocketing, especially since COVID hit, incredible jumps in the cost to build. So if the cost to build continues to jump, which it probably will because wages have been going up significantly, materials have been going up significantly, cities have enacted more and more codes and restrictions on building and more laws on landlords, which makes them not want to build. And yes, there are landlords building new construction for rental properties. That means there's less properties being built, and those that are being built are way more expensive, which means housing prices are going to continue to go up. So it's really hard to see any scenario where housing prices decrease. Maybe they slow down a little bit, maybe they don't go up as high, but really, based on the things I'm seeing, they could continue to keep going up at a pretty significant pace. And in my market right now, I did some checking, record low inventory again, almost no inventory, almost no nice houses for sale under $400,000. By nice, I mean in good condition. It's crazy. Things keep going up. And with cost to build going up and record low inventory, I don't see how they can't continue to go up in the foreseeable future. And right here, I kind of shortened up the graph a little bit to give you a better idea of what cost to build has done. And you can see decreased and then really has shot up. And something might be really interesting, I'm not going to do it in this video, but maybe for a future one or a short or something like that, I might overlay or do a chart that shows the cost to build versus median housing prices in the United States and see how those two correlate and how close they are, because that could be a very telling sign on exactly what prices are going to do and if this is a good indication of what prices will be. And yes, just to give you a sneak peek, here is the house price index for that same period. I don't know what I just said right there. It looks eerily similar to exactly what the cost to build is. So that's pretty interesting, and we'll see how all that plays out. All right, so as you can see, my prediction for 2022 for most of the United States is that prices will not decrease. I mean, I could be wrong. Nothing is guaranteed. It's just my guesstimate prediction based on inventory, cost to build, and the fact there aren't enough houses out there. We've had 4 crashes in the history of the United States in 1930s, 2006 to 2012, 1870s and 1830s. All of them were caused by massive overbuilding and horrible lending and too many houses, too much inventory. So a housing crash usually happens when there's too many houses and not everybody can buy them. There's an influx of inventory. That's why cost to build doesn't matter during a housing crash, because there's too many existing houses. When there aren't enough existing houses or the supply is being met by demand, basically the cost to build is what drives prices, and cost to build keeps going up and inventory keeps going down. I see no way that prices will drop significantly anytime in the near future. All right, thanks for watching. Please let me know what you think. Love seeing your comments, suggestions, likes, new subscribers, all that. Of course, investformore.com has much more information on actually investing, what we love to do, and we'll be back with many more videos coming up here soon. Thanks a lot.